Welcome back. I'm Peter St. Onge. This is a weekly roundup of my daily videos on the economy and freedom, where I cut through the BS and lay out what the gaslighting clowns pulled out of their hats this week and what is coming next. Inflation just hit 10% annualized, matching the darkest days of Joe Biden. Is it time for Grandma to break out the cat food she packed away when Sleepy Joe wandered off? The reason, of course, is the war, more specifically the Strait of Hormuz blocked like taco night at Pollos Hermanos, and it's quite the change from just 6 weeks ago when official inflation was running 2.4% year-on-year, but trueflation, which scrapes millions of real-world prices, was running just 0.7% annualized. Now, 0.7 is about as low as it gets with a central bank. That's normally when the Fed intentionally creates inflation using interest rates and so-called quantitative easing to print money. Now, energy is only 7% of the CPI inflation index, but when oil is up 70%, that gets big fast. Stripping energy out, so-called core inflation, which excludes food and energy, was just 0.2% on the month, which is exactly in line with pre-war. In other words, the entire inflation story is energy. Having said, if the war keeps going, this will spread since energy goes into pretty much everything. Already, fertilizer prices are up 10%, plastic feedstocks made of oil are closer to 12%, diesel, gasoline, which is used by trucks, is up 50%. Those all bleed into food prices, construction prices, manufacturing. You cannot sell a potato without a truck. Moreover, even if energy is the whole story, it feeds into general inflation expectations. So if the donut shop thinks prices will rise, they could hike donut prices beyond the actual rise in prices. So they go from victim of inflation to cause of inflation. This expectation story is what terrifies central banks, and it's already running ahead of prices. The University of Michigan's one-year inflation expectations pop more than actual inflation. Happily, it's looking like the war is winding down, with Trump and Iran both looking for excuses to declare victory. We've already gone from a hermetically sealed Strait of Hormuz, through which 1/5 of global oil passes, to diplomatic trench warfare ship by ship, day by day. The good news is that knocked oil prices down $10. The bad news is they're still 25 above pre-war. The twist is it's not the war itself driving prices, it is the oil. Bill Clinton, for example, bombed Iraq recreationally throughout the 1990s, and it barely touched oil prices. So even with peace, oil could stay high for years, since Iran has now discovered they thought they needed nukes to bully the world, but it turns out they only need the Strait of Hormuz. Oil is their nuke. They're already using the strait to pressure Trump to make Israel stop bombing Lebanon, a topic they didn't used to have a say in. And as they feel their oats, they could keep going. They could pressure to remove sanctions, bases in Kuwait, arms sales to Saudi Arabia, meaning oil prices could stay high long past the war. So what's next? The key strategic date is June, when voter impressions of the economy lock in for midterm elections that are already looking like a wipeout for Republicans, partly because Senate Republicans surrendered on election fraud, but largely because of inflation, which remains the top voter concern 5 years running. That inflation will keep going as long as oil is disrupted, and ironically, this war may have made that worse permanently, meaning we're going to have to drill a lot more here in America. A new study finds nearly half of the most productive Canadians are fleeing to the United States, even as third-world migrants now make up 98% of Canada's population growth. Canada is scooping up the gravel and sending the gems to America. The data comes from the Bank of Canada, Canada's Federal Reserve, who reports 40% of Canadians who would rank in the top 10% of earnings have already left to the U.S. These are doctors, engineers, scientists, finance, tech, the exact fields where there is a shortage in Canada. It brings Canadians living in the U.S. to 1.1 million. That's equivalent to 10 million Americans living in Canada. So a Canadian is now 59 times more likely to live in the U.S. than an American in Canada. Another recent study found 2/3 of Canadian grad students plan to leave Canada, pocketing their taxpayer-subsidized education. 10 years ago, that was 1 in 5. Last one out, turn indeed took. Bloomberg recently profiled a young Vietnamese-Canadian woman who built a $34 million tech startup in Vancouver, then decamped to the U.S. saying, quote, "You wake up one day, realize your worth, and get out." So why are they moving? Because Canada's economy fell off a cliff under Liberals. In 2010, Canada was richer than the U.S. Now it is almost a third poorer. Since COVID, Canada has grown slower than Japan. Wages are flat since 2016. In fact, wages are now lower than Alabama, while housing costs are San Francisco, as Canada packs 4 million migrants into cities that can't build anything for red tape. Human Resources magazine estimates a tech job that pays $145,000 in Denver or Chicago might pay half that in Canada after tax. It pegs Ph.D. salaries up to 3 times lower than the U.S. That's if they can find a job. A recent study by Stats Canada found there are 1.2 million Canadians competing for just 350,000 jobs. For college grads, it's 500,000 Canadians competing for just 80,000 jobs. It's getting worse fast. In the last 2 months, Canada lost 109,000 jobs. In U.S. terms, that's equivalent to losing 500,000 jobs per month. Prediction market Kalshi is forecasting almost 7% unemployment this month, and also rising fast. Meanwhile, the cost of living keeps soaring. Food inflation just hit 7%. Houses are so expensive, the median mortgage costs half of household income. In Toronto, at 70%. In Vancouver, a mortgage costs 114% of median income. Canadians pay 70% more income tax than America, with top tax in every province over 50%, on top of sales taxes of 12 to 15% in most provinces. They have to do this because government spending and workers are running away to the point 1 in 4 Canadians now works for the government. Sadly, those bureaucrats do things. Regulations are growing by 30,000 a year, including a carbon tax estimated to destroy 500,000 jobs in U.S. population terms. Canadian business startup rates are down by half. In fact, last year, business exits exceeded business starts. They went bankrupt or gave up. Seed capital is down by half year over year. Canada's self-employment share is the lowest in 45 years. So much for those entrepreneurial migrants. So what's next? Prime Minister Carney wants to blame Trump, but Canada's collapse started 15 years ago. The problem is Canada's problems are government problems, and Ottawa likes the taxes, the spending, the regulations, and the migrant invasions. They will not change unless voters force them to change. A word from our sponsor. If you own gold, and many of you do, you already understand how it protects your wealth from the insanity coming out of Washington. The inflation, the recessions, the wars. But with monetary metals, there's a way to actually earn a yield of up to 4% on your gold paid in more ounces of gold. You retain ownership of real, allocated physical gold with no storage costs while your ounces grow every month outside the banking system. If you're serious about protecting your future and building your legacy, head to monetarymetals.com/Peter to get started. One of the best ways to secure your Bitcoin is with a hardware wallet, a physical device that lets you keep your coins offline without internet connection. One of the most trusted names in hardware wallets is CoinKite, maker of the famous block clock. CoinKite devices are made in Canada and they're run by passionate Bitcoiners who've been at this since 2012, back when Bitcoiners were trading in person at swap meets. You can pick up hardware wallets and plenty of other goodies at coinkite.com/ProfSaintAnge. That's CoinKite.com/ProfSaintAnge. Okay, back to our show. Happy Tax Day. It's April 15th, the day you hand over a third of everything you make for government to waste, fraud, and abuse. The federal government now steals taxes just over $5 trillion, while states and locals pile on for another $2.5 trillion, coming to almost $1 in $3 of personal income. For perspective, the entire time since Nicolas Maduro goose-stepped into the port of New York, you thought you were working for yourself, but you were actually working for government. Put differently, You work for the feds Monday, you work for state and local Tuesday, you don't put anything in your pocket until you're making weekend plans. Now, a third is roughly 20 times what the British were trying to tax in the Boston Tea Party. We are free at last. Alas, we do not have tea parties anymore, partly because they don't make Americans like they used to, but partly because that stolen third is hidden. The devil's brew of tax withholding, hiding taxes by putting them on the employer, they look like lower salaries, and embedding taxes where the trucker bought tax diesel, Publix paid property tax and payroll tax, and none of it is listed on the bananas. So where did it go wrong and how to make it right? The original sin, of course, was the income tax passed right before World War I. Indeed, it's a big reason we had a world war. In the old days, governments could not afford them. The income tax was originally promised to soak the rich, starting around $15 million in modern terms, at rates of 1 to 7%. Perhaps you will recognize the sales pitch, millionaires will pay pennies on the dollar. Of course, tax the rich was bait as the rates went up and the tax spread, so today it hits everybody over $15,000 at a top rate of 39%, 52% if you are in California. Not including, of course, the billions of hours Americans spend trying to figure out their taxes under threat of imprisonment, only slightly less fun than a root canal. So what would it take to get rid of it? It's actually very easy. Congress can pass a bill tomorrow. After all, the 16th Amendment allows an income tax. It does not require one. They will not. Congress exists to pillage, but what if they did? The federal government would lose $2.5 trillion of funding. They'd have to slash foreign aid, treasury bailouts for bankers, welfare for the able-bodied, grants to left-wing rioters, overseas wars, one Iran per generation, pace yourself. Even the Somali leering centers, no more leering on the taxpayer dime. You have to throw away the entire welfare industrial complex and the fraud industrial complex it built. In return, you keep roughly $20,000 a year in taxes, but more important, the economy takes off, which could triple that. The reason is just like cigarette tax reduces smoking, income tax reduces income. Discourages work, entrepreneurship, job creation, and wage growth. After all, why would a neurosurgeon work weekends or a rib joint open a second restaurant if most of it is going to taxes? So what's next? Trump has repeatedly endorsed repealing the entire income tax, the first president in history to do so. Polls show most Americans want to abolish the IRS and replace it with a sales tax, including 70% of Republicans and a majority of Democrats. Sadly, Congress has more fun pillaging the republic, even if their voters want to throw the entire tax code in the Boston Harbor. Will the party in the Middle East mortally wound the dollar? For 50 years, if you wanted oil, you needed dollars. Soon you might need Chinese yuan or Bitcoin. Last week, Iran announced a new toll booth system on the Strait of Hormuz, threatening to charge $2 million per ship, which comes to about $1 per barrel of oil. Now, $1 a barrel small potatoes when oil is bouncing around $100 a barrel, but it's big in Tehran, potentially generating $20 million a day at current traffic levels, or $200 million a day if traffic returns to normal with the toll running. $200 million a day is $73 billion a year, which is about a fifth of Iran's GDP. In darker terms, it's about 3 times Iran's military budget. More important, Iran's only accepting Chinese yuan, stablecoins, or Bitcoin, converting the long sacred petrodollar into a Chinese or Bitcoin toll road. Now, when the war started, I did a video on the petrodollar, which is the arrangement that the U.S. protects Gulf monarchies from hostile neighbors, today basically Iran. In return, the Gulf prices oil in dollars and plows those dollars into U.S. government debt, treasuries. So we are the mercenary paid in loans. Not just any loans, loans to the U.S. government so they can fund more leering centers. Saudi gets to survive, Washington gets leering centers, the American people get debt. Now, even before the war, the petrodollar was fraying, with Qatar and Saudi starting to price in euro and Chinese yuan, while the entire Gulf was pushing to reduce dollar holdings in the wake of the Ukraine war when Biden seized $300 billion of Russian central bank dollars, something we didn't even do at the worst of the Cold War. The Russia seizure sent a message to the entire world, including Gulf states, that dollars are not good as gold. You own them at the pleasure of whoever's sitting in the White House. That sent central banks around the world scrambling to buy gold and dump dollars. In the past 2 years, central banks bought over 1,000 tons of the yellow metal. 15 years ago, they bought 30 tons a year. In the 90s, they were selling gold. Now, when the war started, there was speculation Trump was rebuilding the petrodollar, knocking out the two biggest non-dollar oil sellers, Venezuela and Iran. At the time, I was skeptical, partly because Trump's been all over the place on dollar strength. Sometimes he wants it weak for American exports. Sometimes he wants it strong. But mostly because I think the petrodollar is way overrated. Gulf oil and gas is about 4% of world trade, while the Gulf states collectively hold less than 2% of treasuries. So even if they dump half of those going to a neutral non-petrodollar allocation, that leaves Washington paying maybe 0.2% more on debt, currently costing 5% a year, as in the extra debt service would be less than the money we spend defending the Gulf, as in we would be better off without the petrodollar. So what's next? Whatever is next for the petrodollar, it will not end global dollar dominance. What will is what ends every reserve currency, inflation. Namely, government deficits so large they force the Fed to print money, so-called fiscal dominance. Before the war, $2 trillion deficits were sending gold and silver to the stratosphere. When the Iran smoke clears, even if the petrodollar survives, we'll be right back at the cliff's edge. If the petrodollar is mortally wounded, it goes that much faster. A word from our sponsor. Stocks and even gold are all over the place. If you're ready to diversify, Abundant Minds makes Bitcoin mining simple, transparent, and human. You can deduct every penny thanks to Trump's big beautiful bill. It's a 401k for Bitcoin mining. Founded by husband-wife team Bo and Christine Marie Turner after losing $500,000 to broken promises in the mining industry, Abundant Minds was built to protect investors. You own the machines, and they make it turnkey with hosting in their facilities in Oregon. Pricing is clear with one flat monthly fee and no surprises, and they guarantee uptime so you keep earning day in, day out. If you want easy diversification without pressure, learn more at abundantminds.com/Peter to get some of your first Bitcoin mined for free as a gift to my audience. The biggest risk in Bitcoin isn't volatility, it's custody. Because Bitcoin removes the safety net, there is no bank to call, no reset button if something goes wrong. The reality is most people are not properly set up. They hold Bitcoin but rely on exchanges, incomplete wallet setups, and have no real plan for privacy or inheritance. It's exactly what the Bitcoin way solves. They help you move from exposure to actual ownership, self-custody done right, privacy, inheritance, even running your own node, all set up with you step by step. They never touch your Bitcoin, they're your support team. Go to thebitcoinway.com/Prof. St. Ange to book a free call and go from where you are today to a much stronger setup. Now back to our show. AI can now hack everything as Anthropic's new model finds more exploits in a couple weeks than the entire global security community has discovered in the past decade. Will we go back to pen and paper, FedExing silver coins to pay the Netflix bill and burying the gold in the backyard? Last week, AI company Anthropic of Claude fame announced its internal Mythos AI model can hack everything. Every operating system, Windows, Mac, Unix, every database, every web browser, therefore every website. So hospitals, power grids, military, the stock market, your bank. Just days later, Treasury Secretary Bessent called in top banks to coordinate emergency measures. The reason is in just a few weeks, Mythos found 4,000 so-called zero-day vulnerabilities, meaning nobody knows about them, so there is no defense. Anthropic immediately set up Project Glasswing to bring in 40 partners to design defenses before Mythos goes public. These include Microsoft, Apple and Linux, browser companies, security companies like CrowdStrike, cloud infrastructure like Amazon and Google, who run pretty much every website, chip makers, banks, and of course the Department of War. The problem is over the past 30 years, everything has moved online. Your paycheck, your medical records, your retirement savings, the supply chains for food, gasoline, the electricity, the database that knows who you are and what you own. Now, we did this because it's cheap and convenient. Imagine trying to run an economy without computers, but it came with major hacks. In 2017, WannaCry and NotPetya wiped out hundreds of thousands of PCs and servers at major companies, including hospitals. In 2020, Russia sat inside Treasury and Justice for 9 months undetected. A 2024 attack cost $22 billion and froze prescriptions for millions, while hospitals could not get paid. China stole 21 million U.S. security clearance files, which looks an awful lot like an act of war. Equifax leaked 147 million American Social Security numbers, so 4,000 of those in a couple weeks. It's COVID in terms of the economy. Now, it's tempting to say enough is enough. It's time to throttle AI. The problem is whatever Mythos can do today, Chinese open source can do in 6 to 12 months. Meaning we are on the AI roller coaster, like it or not, climbing higher every day, and the only solution is good guys go faster than bad guys. It's exactly what government oversight would kill. Just like gun control cripples the good guys and bounces off bad guys, AI regulation cripples Anthropic and Glasswing, but the bad guys get it in 6 to 12 months. So its next 4,000 hacks in a couple weeks is big, and in 6 to 12 months, it'll be in the wild, whatever Anthropic does. Top companies will deploy defenses in time. The half-assed companies will not, including the poster child of half-assed government databases and systems. In the meantime, it might make sense to pick up something that cannot be hacked, whether it's a stack of gold coins or some Bitcoin. Thanks for tuning in. Remember to subscribe so you don't miss an episode, and go to petersanons.com for daily videos and in-depth articles with charts and all the gory details. Okay, we'll be watching. See you next time.